What's up guys, Cryptomindd here. So, a common question that I get is, when do I enter a trade? And first of all, my biggest answer that I can give to that is that there's no magic pill or whatever. It all depends on your understanding of the market and your own understanding of your own technical analysis. Now, let's just get into it. First, before I begin, the purpose of this video. The purpose of this video is not to give you a strategy. I'm not here to tell you what to do. If you are watching this video, it's most likely that you already have a strategy or developing a strategy or are in a mentorship or whatever it might be. The purpose of this video is to make you realize what you are doing wrong and what could be done better. Also, it's here to make you realize that understanding of the market is very important. Understanding why it's moving, which direction it will move. It's all very important. So that's what we will handle here a little bit. So first of all, your problem is, the biggest thing I want to start with, you already most likely know what your problem is in trading. The only thing that is holding you is to better yourself. A lot of people have the doubt of bettering themselves to have that better future. It might fear them. It might fear them to become more profitable. So those things are very normal. Also, a common thing is that you have no mentor. You might be a newbie into trading or already a little bit experienced, but you still make the same common mistakes, which happens most likely because you don't have a mentor, somebody who guides you. Again, guys, a mentor is very important. When I started back in 2017, well, in 2018 with trading, we had a famous guy called Phil. That was a type of my mentor. I never paid for his courses, but I learned a lot from his YouTube videos back in the days. Now, of course, this guy is not very active anymore. It's a little bit faded away, but I've learned a lot in my beginning years. So I had somebody that I could look up to and learn from what he was telling me. So a mentor, a free one, somebody that you take a lot of value out, for example, on YouTube or on Instagram, Twitter, whatever it might be, or a paid mentor. A mentor, regardless, helps you of becoming better. Another common mistake is the consistency, guys. Consistency in trading is important. You have to keep on trying. You have to keep on going. Don't be lazy. A thing that goes aligned with consistency is no paper trading. It's the same like you go to a sports club, right? Let's say you want to become a fighter. You want to become a kickboxer, an MMA fighter, or whatever it might be. And you're like, you know what? I can just start immediately with competition. I can do this without any experience, without any training. You're like, I can do competition, I can do this, blah, 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 blah. Eventually you end up knocked out on the floor or getting submitted or whatever. The same with trading. If you don't go to paper trading first and backtest your strategy and keep on trying to see what could be done better, this means 75 to 100 trades. If you do not do this, you're missing out on an important training for your profitability towards later. If you have strategy, definitely if it's a new strategy that you are learning about or that you try to develop, my biggest tip is to paper trade, and a lot of you don't do that. Another common mistake is, or another problem is, that you go against the trend. You just go long or short without any real reason. You're looking at the market and you're like, okay, this might go up, this might go down. I'm gonna just position and hope for the best. You're just are very impulsive about your decision for your trade. So that's a very important thing. And the other thing is the higher time frame versus the lower time frame, which goes in confluence with the no trend. A lot of people only might pay attention to the lower time frame, which goes completely against what the higher time frame is saying. And there's a saying in trading or in investing, the higher time frame always tells you which direction the market is going. So higher time frame, very important, and a lot of people confuse it with the lower time frame because they think lower time frame is all that matters for their strategy, but it isn't. So those are your problems most likely. Of course, there are some other problems that might be in here, but these are the most common 100%. Then another common mistakes are the no grasp of technical analysis or even the understanding of price action actually. It's actually both. So a lot of people might correctly draw their support and resistance zones, might perfectly know how to do their Fibonacci, and whatever you might use for your trading strategy. But then once the market starts to move, they have no idea what the fuck is going on. which then leads obviously to no action. A lot of times when you are looking for a trade and, for example, let's just say a support zone gets broken, gets retested, it happens, but you do not react on it. The action is happening, the reaction is happening, but you don't take any action. This goes in confluence with no grasp of technical analysis or understanding price action. Another common mistake that I see, which I see daily on stories on Instagram or Twitter posts from certain pages or certain people, is too many indicators. Again, guys, there's nothing wrong with an indicator. If you want to use EMAs, MACD, bouldering bands, whatever there might be for you that is useful for you, use it. Too many indicators is not very useful because it most likely will lead to you being confused, as not every indicator tells the same thing. So too many indicators is definitely not a good thing. And I know a lot of people, definitely beginners, use too many indicators, which can be very simple, which can be all simplified by maximum using one indicator, or even better, which is what I do, is focus on pure naked price action. Pure naked price action for me, guys, is the key thing to understand in trading. If you can understand price action, you don't need any indicator whatsoever. Don't forget, an indicator is just an indicator just indicates what the price is doing. But if you already understand price action, you don't need the indicator to help you. So if you really want to get good in your technical analysis, try to focus only on price action, naked price action, and try to understand how it moves. Now, another thing that's very common is emotional entries, FOMO, most likely, or greed, whatever it might be. And that is very likely. We all have been there, that, for example, when you look at the chart and a thing like this happens, and you're like, oh, you know what, I'm gonna go long around here. You get a little bit into profit to suddenly then, boom, a massive loss. We've all been there eventually. So emotional entries, up or down, are very normal for definitely beginning traders. Then these two obviously go in confluence with each other, because if you don't have a trading plan, you're planning to fail. There's a saying in everything, in entrepreneuring, investing, whatever. If you're not planning, you're planning to fail. The same with trading, guys. Make sure to have a trading plan. Definitely as a beginner. Even as an experienced guy, actually, you should have a trading plan. No matter what, you should use it. You should fill it in. It's very important. Then another thing, like I said, that is confluence with it, is a non-working strategy. They have a strategy. They know a little bit about it. But again, it might come down to too many indicators, emotional behavior, whatever it might be. It's just something that doesn't really fully work out, which as well comes down to not understanding the structure of the market. A strategy without understanding of structure in the market is a strategy that is most likely planned to fail. So make sure to, over time, when you try to better yourself in trading, to get a working strategy that focuses as well on the market structure. Market structure is everything, guys, believe me. Then, of course, the overcomplicating. The overcomplicating comes with everything here. Everything. You look at too many things, you're emotionally confused, you don't know what you are doing, so you're just overcomplicating everything. Or you might even see a bias, for example, prices are gonna go down, and your bias might be perfectly good, but then you're like, this is gonna happen, and this, and this, and this, and this, and this. Always a what if, and that doesn't work in trading. Stick to your bias if you find your bias. If you don't find the bias, you stay out of that potential trade. Simple as that. So stop overcomplicating. Then again, guys, the no action. When the market is reacting towards a specific zone or a structural zone or a pattern, whatever it might be, if you don't react, if you do not put action in, so basically if you don't react towards that, you are just missing out on trades. For example, a lot of you might have, if we look at Bitcoin here, for example, this trade, a very, very clear and simple structural break under this zone, which I as well, by the way, shared on Discord and on Instagram. Then we had this retest here, And a lot of people are like, this retest might be actually good to enter, but you know what? Maybe it might go a little bit higher. I'm gonna wait. Boom. They miss out on the reaction. They do not put in the action, and they miss out on a beautiful trade where you at least could have a take profit one or full take profits, whatever you would like. So action is important when the market is reacting towards your zones. And then again, no confluence, no confirmation, which equals a little bit of random entries. It's more about your emotional thought that you're like, okay, I feel the market gonna go up, or I hope that the market gonna go down, whatever it might be. You have no confluence or confirmation, which obviously, without confirmation, you again will plan to fail. Confirmation is everything. Making your analysis. How do you make your analysis? First of all, do not make it random. Do not go to analysis and be like on the 5-minute time frame or whatever. That doesn't work. Determine for yourself which comes along with your trading plan. Again, I will make a lot more videos in the future about all of this, trading plans, emotions in trading, whatever. So don't worry. But plan for yourself a main time frame, right? The time frame that you would love to trade on. Now, what I do advise with everybody is to understand what the daily time frame is saying. So I would do advise you to start on the main time frame, which would be the daily time frame. No matter if you trade on the 5-minute, the 15-minute, I do think understanding of the daily time frame and its key zones is very important. Then an entry time frame. So for example, in my case, as you can see, I mostly do my analysis on the daily time frame. Where do I find my entries? I do find them on the 4-hour maximum on the 1-hour time frame. That's about it. So I use 2 time frames always, sometimes 3, but most likely I will only use the daily and the 4-hour. So for example, if you are a day trader, which I think the 1 hour is a good time frame for, you might be analyzing on the daily, draw the support and resistance zones or whatever it might be that you're using. And then you go to the 1 hour time frame and start to look for zones where the price might react. For example, price hit it here, and then you could say, okay, price hits here, a support zone, and confluence with candlesticks and whatever you might use, and boom, price goes up, you take your profits and whatever. So that's a very big thing. A main time frame and an entry time frame. A time frame where you base your analysis off, and one where you find your entry on, which is then a lower time frame. If you do not want to use the daily time frame or the 4-hour time frame, you could do this on the 1 hour or on the 15-minute, whatever fits you and your idea of entering. But I do always advise to go in confluence with the daily and the weekly trend. Then, of course, what comes along with it is the understanding of your technical analysis and the price action. And also the key levels. Guys, there's a difference between a support and a resistance zone and a key level. A key level is a certain level when it gets broken and invalidated, the market completely turns into the opposite direction. So for example, a perfect example actually that we have is, for example, right here. So we had this huge uptrend here from 20K to 31K. Then eventually we broke this zone right here, right? A little bit later, we retested this zone. This was a structural break. Even if you can see it right now, this zone aligns with this zone right here. A structural break. This is not the same like a support or a resistance zone. It's a little bit different. It often comes down to the same, but there is a huge difference, guys. If you would like to know more about structural zones and understanding the structure in the market, in my private group, we have a course and a course included within the private group. So feel free to check it out whenever you want. But the understanding of structure is very important because as you can see, we retest this zone. If we would close above the zone with a full body candle, there would have been talks about seeing higher momentum. What happened here was pure, beautiful rejection and price just plummeted down. Same here with, for example, this zone right here. Talking about this zone, We break it with this candle, retest on it on the next candle to eventually moon up to where we are, to where we were a few weeks ago. So all those things are important to understand. The key levels are so crucial, and they often are very closely located to a support or a resistance zone, but they are not completely the same. Another useful thing to know is that eventually a key zone can turn into a support or resistance zone towards later. But in the beginning, when the break is happening, that key zone is nothing more but a key zone, and later on it will change. So understanding that is very crucial. Now, of course, you might be a different guy that is a pattern trader. I do like patterns as well. For example, as you can see, this pattern here, reversal pattern. This pattern here, reversal pattern. I love reversal patterns. Other patterns I do not trade at all, but reversal patterns, if understood well, are very easy to trade. So if you are focused on pattern trading, I would highly advise you to, first of all, try to focus on reversal patterns because they are pretty fairly easy to understand and to trade. I mean, you have to be kind of, stupid to not fully understand a reversal pattern. They are super easy to trade. So try to understand patterns, try to understand how they move, when is the good point to enter and to exit. Because again, a pattern is not always a confirmation, but it can give you good profits if understood well. And then of course you could have some people that purely trade fundamentally. Now, I'm not a fundamental trader. For example, with Ripple, which I made a video about as well, before Ripple exploded, I just saw technically that Ripple was about to explode sooner or late. There was something coming, and eventually, fundamentally, it aligned with each other. A thing or a theory that I have as well is that fundamental entries and technical entries are often the same if understood well. Somebody who can understand the price action movement knows that there is something coming without even need to look at a fundamental reason for it. But that's out of my league, the fundamental entry. Then, of course, the trend trading. Again, guys, trend trading is important. Understand the trend. Even if you trade on the 15-minute chart and the 15-minute chart is clearly bearish, but the daily chart is clearly bullish, you should let go of the short opportunities and look for the zones where you could find the long opportunities aligned with what the daily trend or the weekly trend, whatever you're looking at, is saying. Believe me, guys, this is a big tip. This is a tip that I use myself always. Definitely when I used to look at smaller time frames. Over time, I've learned that scalping is just pure headache for me, and I went over to swing trading. I love swing trading. It's a lot better for my mental peace. So I do highly advise to work in confluence with higher time frames and their trend. The daily trend is bearish. Look on lower time frames for short entries. The daily trend is bullish. Look on lower time frames for long entries. Do not go against it. An example of that is, let's say we are in an uptrend, right? But you are that lower time frame guy that is like, you know what? Instead of taking this big move, I'm gonna just take this small move. You go against the market with, again, a higher chance of losing money as well. So decide your bull or bearish case. Then, of course, as I said, guys, structure understanding is very, very crucial. It is very important for you to understand how the structure of the market is moving, when it's broken, when it's invalidated, when it's get re-invalidated. All those things are very important. And then, of course, trend trading, guys. For the people who don't know, a uptrend is formed with higher highs and higher lows. A downtrend is formed with lower highs and lower lows. Simple as that. Do not overcomplicate things. Trading is 10% technical, 90% emotional, guys. Do not overcomplicate the technical part because your emotions are fucking with you. Now, when do you enter a trade? Guys, again, it depends on your strategy. Everybody has a different strategy, right? You might have a strategy, with, I don't know, 1 million indicators while I have 0. Another one might work with, some algorithm, while you might work with EMAs. It all depends. What is what is important is that you must understand what is happening within whatever you are using. For example, certain EMAs are crossing, which touches then this Bollinger Band or this MACD. Everything that's happening within your strategy is up to you to understand what is happening. Understanding is important. Again, guys, I can't say it enough. Which trend? Action equals reaction. If there's something happening, a key zone gets broken, of course, be patient, have emotional control. Don't immediately try to enter. Wait beautifully for a retest of that key zone, because key zones do get retest, guys. So be patient. Wait over retest of that key zone. Then you can eventually enter your trade. If you do not act to the reaction, you will lose out on a beautiful trade. Also, a trading plan, which I'll get a little bit more into depth about that in another video, which is coming soon. But a trading plan is so crucial, guys. A trading plan is planning to succeed. Without a trading plan, you plan to fail. Simple as that. Your trading plan can be, of course, very personal. It's up to everybody else. But there should be some crucial things in which, again, I will make a video about later on. Then, as I said before, patience and emotional control. Now, what do I want you to do? As this is actually a long video, I never expected this video to be this long, 21 minutes already. But I want you, definitely, if you are struggling with your entries, is to reset. Why do I need you to reset? Is for you to do better. Just like becoming a fighter, you cannot become a fighter without good training. Same for soccer, same for basketball, same for swimming, same for whatever it might be. You need training. So I need you to go back to paper trading. Paper trading is a crucial thing, guys. Go back to it. Don't be ashamed of it. Don't be ashamed of missing out on moves and then be like, I could have made money, blah, blah. That's a bullshit mindset. Go back to paper trading. Do like 75 to 100 paper trades with a good risk to reward management. Make sure you come out super profitable at the end, or at least profitable at the end of those 75 to 100 paper trades, because it's super important, guys. Training is crucial, because every time you make a mistake on your paper trades, you should write it down in your trading journal, for example. Write down whatever happened, and that's how you get better. It's pretty simple. Now, another thing that I always suggest is find a mentor or a course. A mentor or a course doesn't have to be paid. Now, of course, if you want a little bit of quality, I do advise you to look for a paid mentor, somebody that you obviously trust, ideally. But it's not always paid. Like I said, when I was in 2018, when I was starting, I had Philico, and I never bought a course of him, but looked all his YouTube videos. It was filled on there. It was just massive. I've learned a lot. Another guy, as I said, used 1 million indicators, which didn't make any sense to me over time. But there's a lot out there, guys. There's a lot of information out there. Just make sure you understand whatever is happening. Then again, understanding of price action and tactical analysis comes with paper trading. Go back to paper trading, understand what is happening, understand how the market is moving, understand what the key levels are, because there's a certain sentence which I give away in my course as well, actually, which I will not reveal here, obviously, but there's a short sentence of maybe like 7 words that I say, which, if understood well and if taken away with you right, can change your whole profitability. But it's you who has to pay attention to those details in the market, because it's all about what your eye sees, guys. What I'm seeing right here is completely different than what some people might be seeing right now. So it all depends from person to person. But again, guys, key levels are key levels. They do not change. They are there. The key levels are the same for everybody eventually. And the price, Bitcoin is not moving different for me than for you. So understand the key levels, guys. Do this, reset, and then go. This might take a while. This could take 1 month. This could take 1 month. Not likely. Well, if you do, congratulations, but that will not make any sense. This could take 3 months, 6 months, a year, 2 years. But believe me, guys, do this in peace. train your mind, train your emotions, train everything that has basically been said here, and your entries will be fine. There's no magic pill, sorry to disappoint you, to better your entries, not at all. So get that in your heads. And then next, my mentorship, of course, I do have a mentorship, which is a community with a course included. So if you join our community, there's a course in there which tells you everything about structure, how to read structure, how to use structure in invalidations and re-invalidations. Everything is there, the theoretical part and the practical part. So always welcome to check it out. And also, this is for everybody right here. I'm always available if you have a question, whether you're a member or not, a follower or not, a subscriber to my newsletter or not. Just make sure if you have a question to reach out, because I like to make videos about things like this because everybody eventually can learn from it. And I hope this genuinely helps people. Also, guys, make sure to subscribe, to hit the like button, help the algorithm. I'm working here. This is almost a 30-minute video, which I'm making for you. So I hope you all like it. And good luck, guys. It's, again, do not overcomplicate it. You got this. Just do not be lazy. Have some consistency. Be hungry to become better, guys. Just be hungry. Let's get it. Right, guys? See you in the next one.